have Mayur Milak, Senior VP Research Auto and Aviation of Asian Markets Securities, joining in to talk to us about everything that's happening with SpiceJet. Mayur, good morning. Thank you for taking out the time to talk to us. Just a few days ago, we had a very successful completion of the SpiceJet QIP. Some parts of the market believed marquee investors like Madhu Kela had made an allocation too. Turns out that's not completely true. What did you make of this QIP, and do you think enough has been done now for SpiceJet to start charting its road to recovery?
Yeah, so, first of all, congratulations to Ajay Singh and team. I think pulling off a 3,000 crore QIP is not a small task, especially in this scenario where they stand today with a lot of allegations and a lot of commitments for payments. But having said that, I think the Indian skies are in a beautiful space. I think, there is hardly any competition, any serious competition now, limited players. The fares are holding up pretty well. The pricing war story is behind us. Crude has come in favor. So I think a great time for somebody to look at Indian skies. And then obviously you get only two listed names to play at. So yeah, clearly I think that was one prime reason why SpiceJet could have pulled it off so beautifully.
So you're convinced, Mayur, that despite the medium-term concerns that SpiceJet is currently facing, once the recapitalization is completely done, and the funds have been utilized to prepay the debt, do you feel like the upside is significant? And if yes, would you recommend, or do you have a buy call on SpiceJet then?
So we officially do not have a coverage on SpiceJet yet.
Okay.
Too early really to say that, this is a super positive. I'd say this money will definitely help them to get out of the woods, get into action. I think it helps them to take care of their grounded aircrafts. You are entering a peak season for the aviation skies, right? The October to December, and then again Jan to March is a great period. So I think getting those planes back into action will definitely add a significant profit to your overall profit growth. That I think will definitely help them. But clearly, the mathematics of the game suggests that they will need another round of funding to fuel up a stronger growth. So, but I think with this money, they can at least show the intention of growth. And then once they are on the growth path, they will definitely need one round more of money is what we anticipate.
Right. You want to tell us about IndiGo Aviation, because you did say that it's clear blue skies and the sector has got to go only one way, which is up. If you don't have official coverage in SpiceJet and it's not a preferred bet, do you like IndiGo Aviation?
Yeah, I think IndiGo is a clear-cut top buy. We've had it as a top pick for the last entire year now. I think we've been telling to clients very regularly that the biggest thing that was holding back the profitability in these skies, other than of course the crude factor, was largely the pricing war. I think with Tata's coming in with this game sorting out, the pricing war is definitely a thing of history. You are in a scenario where demand is very steady. People are ready to pay a bucket price of 4,000 and above in a very regular, consistent way. We've gone back to good numbers. The crude factor has come off critically, right? So we, at the beginning of this year, we were building crude at $85 to a barrel. It is practically down between 70 and 75. Now, crude oil being 40% of your cost, that gives you a big heads up. For any other cost that could typically come up in any other way, plus adds a lot of cash flow and profitability to your numbers. So clearly, I think we have a strong buy on aviation and in IndiGo Aviation. Yeah, I think our initial target price was a 5,500, but I will stick my neck out in saying that there's clearly an upside to that target price as well.
Exciting. I'm sure viewers love to hear, convincing calls such as this one. Do you feel like there could be a direct impact on margins with the introduction of business class now by IndiGo Aviation? Some of it may not be immediate, but in the medium term, do you think margins stand to see a significant upside on IndiGo?
So I think, yeah, see, we've over the last decade, we've known IndiGo as the best low-cost model entry-level play. Right. Clearly, they are trying to walk a new strategy for something that they've not really been known for. So yes, there is going to be a task for them as well. They've never proven metal into offering a better service than a low cost model. I think that is the best model that they've showcased in the last so many years. But clearly, I think this possibly comes at the back of the fact that they now have a 60% plus market share in India. So the obvious choice for them for the next leg of growth will be to go international. And then what better to start with, a change little in the domestic services as well. So I think this clearly defines a new path. But yes, we will have our entire lens on how they prove this one as well. So clearly, yes, a new thing to watch out for, but I think they are on the good path.
Any downside risk to this, Mayur? Because while I understand that they've got ambitious plans, but the fact remains, and we've seen this from numbers last month with the maximum number of flights cancelled for IndiGo. That also could be because of they do have the maximum number of flights in that sense, right? So it's all relative. But do you feel like this, with this whole venturing into the global marketplace, competing internationally, capabilities may take some time to catch up. Any sort of risk you see for IndiGo achieving the target it has and you have as a consultant on that on the stock?
So I think see two things here. One, that clearly post-Jet, we've always had two players, right? Air India and Jet Airways. But post-Jet, there has been no second guy really to take advantage of the growth which lies for all of us outside of India. So I think IndiGo definitely would have seen a vacuum there. And I'm sure, they are a very capable team. They would have done their homework and their math of how they really want to do this. So while, of course, you have to up your game because now you're entering a global play, right? You have competition. Maybe you do not have as severe a competition in India, but globally, they will have the best of challenges to face out for. So yes, this is going to be an uphill task. But I think, with the kind of balance sheet strength they have, the kind of experience that they've had with all these years, a steady team, they would possibly be the best guys really to watch out, in this space as well.
What is the outlook on ATF prices? Given the way crude is moving, it's becoming very tough to predict the outlook, right? Because on one hand, your demand is under pressure, but on the other hand, you have worries such as geopolitical stress that keeps crude higher. What is the impact of that on ATF, and what do you see in terms of trajectory?
See, I think two things here really nobody can really predict where crude is going to go. But a very interesting thing that I would want to believe, you have two oil nations, right? Russia and Iran, both directly or indirectly involved into some kind of war space. So clearly, this crude would have some kind of premium based on those two wars. Uh, Clearly, crude coming off from 85 into the $70 space tells you that the global demand is questionable. So while there is a supply glitch, this was always there for the last 2 years, but clearly demand is not as high that would have possibly had its impact on the price. So I will want to believe that, that unless you do not see a very, very strong global demand coming in, there is definitely a further upside to crude prices being further down, if any of these wars were to kind of neutralize. So clearly, I think the $100 regime is not really visible in the near term. Of course, I'm still not an expert into commodities, so can't really take a call on that. But at least the global logic suggests that we will remain in the best case scenario should be like a $70 to $80 for crude, which I think is great for Indian skies as far as the aviation guys are concerned.
Very lastly, Mayur, what's the price target on IndiGo? And if I know you don't track SpiceJet or cover it in that sense, but if you have a price target, that'd be great.
So I think IndiGo, we have a buy with a target price of 5,500. But as I said, the number demonstrated by them into their quarterly profitability clearly has an upside from beyond of what we are targeting as of now. That is where we are. And SpiceJet, I think, yes, looks good, but we do not have an official target price on that.
Well, thank you, Mayur, for that. That's the word coming in. IndiGo Aviation is a clear preferred pick by Mayur Milak, who's been tracking this sector for years and is an expert in the space.